Good morning, everybody, and welcome to a very different edition of Morning Markets. Typically, we'd be looking back at what's happened in asset markets over the past 24 hours. Today, we're going to look back over 2020 and the journey that we've been on to get to the 236th episode of Morning Markets. So maybe to rewind to the start of 2020, where did the genesis of the Morning Markets idea come from? Well, it came from a discussion with Daniel Harrison, our Chief Executive, our marketing team, thinking about how we can keep our clients, keep our advisors more informed about what's happening in asset markets, but cutting through the chase and putting across factual commentary and our interpretation of what's happening. Trying not to sensationalise it as we see in the newspapers and in the financial press, but to focus on the facts and our interpretation of those. So we started off on the journey of Morning Markets at the beginning of the year, recording it in the office right after our morning meeting. So our morning meeting that the investment team provide the genesis for the information, and then off we go. We go into the room and we recorded the video with our colleagues from the marketing team. And that was all very straightforward. Fast forward to March the 23rd, when we start to work from home. It's, well, how are we going to continue to do Morning Markets and the various videos that we produce? Our marketing team had been very much in the front foot. How are we going to provide the technology to the team? And we've all, on our laptops, we've had the software installed that allows us to record and then transfer across the videos to the team to upload. So a seamless transition. You've probably noted some of the funny challenges that we've had at times with that, be it poor Wi-Fi connections, cameras freezing, how do we get the right lighting such that it doesn't look too dark in the room, etc. And the odd noises in the background. But that's part and parcel of working from home. And I don't think it's changed the content at all of what we've been delivering. I'd also like to say thank you to our subscribers and those that watch Morning Markets. Your feedback has been very important in this process, and it's allowed us to refine the messages and to change areas of the commentary that we've been making. So please do continue to provide that feedback. It's really crucial and it's important to us as well. Reflecting on 2020, certainly it's been a year of challenges from an investment perspective with the volatility that we've seen in markets. Hopefully by doing Morning Markets, we've allowed you to understand what's been happening in asset markets and how that's been impacting what we have been doing and decisions that we've been taking within the portfolios. But taking a step back and just thinking about that volatility that we saw in markets at the beginning of the year, particularly in that February and March timeframe, where we saw very significant and material moves in asset classes. We look at the US, we saw the S&P 500 fall over 20%, 22% in 20 days, one of the swiftest bear markets that we've seen. We look at that across the globe, but very similar reactions in equity markets, and in certain areas being even more mirrored and amplified than that. Looking at sovereign bonds, we saw a tremendous rush into sovereign bonds as investors sought the safety that they could provide, and that has driven prices up and yields down to record low levels, and indeed the stock of negative yielding debt continues to grow. Looking at the corporate bond market, so investment grade and high yield, we saw spreads there move out quite dramatically in that period of February and March, where it looked at times that the market wasn't really functioning effectively, and indeed as we went through that, I think that is the case, we would argue now. We saw spreads maybe in some areas of the market triple over that period. We saw certain sectors, those most in the eye of the storm, leisure, travel, oil and gas, being really very significantly impacted in that period. The other asset class to look at is just currency markets and what happened there. Significant volatility again, a flight to safety to the US dollar, and the impact then that had on other currencies. So significant weakness coming through in emerging market currencies, stress in sterling as well. Sterling trading down to 115 against the dollar over that period. A situation that over time has been exacerbated by the back and forth through the course of 2020 that there has been on Brexit. We've tried to look at asset markets and the sentiment as a key driver of asset markets through the course of the year. That sentiment has really been driven by a number of factors. COVID-19, very much front and centre of that, but initially around infection rates, hospitalisation rates. But then as we've moved through, it's about, well, what are the treatments that are available? How have vaccines been developed? And now to the stage where we got the announcement from Pfizer on the 7th of November of their vaccine, and then the two subsequent vaccines that have been announced. So 3 viable and workable vaccines that are now being rolled out. We also looked at the fiscal response and the requirement for very significant fiscal responses from governments to transition economies through that sudden stop. Just looking at some of the charts this morning, it's just worth reflecting on that and the very significant drop-off that we saw in activity through that period. The fiscal response is some $9 to $10 trillion of global GDP. That's both on a direct and an indirect basis. And if we look at that, and to try and give you some context for that, global GDP is about $140 to $145 trillion. So some 6 to 7% of global GDP has been put in to the economies to help them navigate their way through this challenging period. We've also seen tremendous responses from central banks on the monetary side. So monetary policy has seen interest rates cuts. We've seen quantitative easing programs materially increased over the period. And again, that has supported asset markets to start to function again properly, because I think looking back at that period in February and March, we would argue that at times asset markets weren't functioning in the way that they were intended. I think also then just where are we in terms of political risk? That's another factor that was the start of the year. If we wind back the clock, we're very much focused on the relationship between China and the US, where were tariffs, etc., and how that was going to play its way through. Presidential elections, Brexit discussions, all issues that have impacted sentiment and have impacted asset pricing through 2020. Looking into 2021, what can we expect? Well, I think 2020 has showed that any form of prediction is fraught with danger. So I'm not going to go there. What I'm going to talk about is the need to stay true to your process. Actually, yes, the 1st of January marks a new year, but those lenses that which we looked at and have looked at markets through this year remain as relevant as they do on the 31st of December to the 1st of January. We'll continue to look at markets through that perspective. That, I suppose, brings me to the point that investing through challenging times is difficult. There's an emotional response as to what action you should or should not be taking. Maybe at times the best course of action is to do nothing. And that would have been very much the case with 2020, and in particular the 23rd of March, which marked the bottom of asset markets, and then looking forward to the returns that they've subsequently achieved. But staying true to your investment process is crucial, and staying true to that core principle of diversification within multi-asset portfolios is crucial. It's a guiding principle that we at True Potential follow. And that's diversification at a manager level, at an implementation level, and at a view level. That all works together to dampen down or to provide a less volatile journey for our clients and allowing them to do more with their money through time. What is and will be something that we will focus on is just the vaccination programs and how at various different country levels vaccines are working their way through, so that you can see the percentage change, i.e. what percentage of the population is now vaccinated. And that will be crucial then to allowing us to see economies reopen and getting back to some of the way they have functioned historically. That's not to say that there won't be change. There will be change. We've all embraced home working, we've changed the ways in which we shop, etc. So there will be change as a result of this, and that's something that again will present opportunities for investors to look at and to consider going forward. I'd just like to end by saying thank you again to you, the viewers, for joining us on the journey with morning markets this year. Please do keep up your feedback to the team so that we can improve and we can continue to give you what you need from these videos. I'd also like to say thank you to Graham and Katie in the marketing team for working behind the scenes every day to put the video together and get it out to yourselves in a very, very timely basis. That's it from me. All the very best for 2021.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.